What is up, YouTube? I hope you're having a good weekend. Merry Christmas and happy holidays to everybody who's watching this video. Appreciate you guys taking the time out to be here. Just wanted to post the trade recaps from the week here and kind of go through everything that we took on the Discord community with our team and play by play of each trade breakdown. So this week we had sent out a newsletter on Sunday highlighting the potential move of sweep bottom and then the retest of the 3835 and the 3880 and 3900 shortly after. That's exactly what we got, but it was really fast, and so we wanted to definitely cover what all happened here. And also midway through the week we had some intel that came in that also helped us to make better decisions throughout the entire of this session. For the early on in the week, on Monday, we had a big sell-off into this demand zone down here. We've been talking about the demand zone for a while now, and you know, this has been the possible demand zone for SPX for multiple weeks. We've been covering the possibility that we get a bounce in this zone. And that's exactly kind of what happened, but the bounce didn't last for a very long time. We had almost like a double bottom situation here, and then a series of other market dealer events that caused the market to whipsaw this week. So we're going to break down everything and kind of just give you guys the play-by-play. So the entire week resulted in a $34,000 profit, roughly almost 35,000, and we're gonna go through every single play here. So I'm gonna get right into it. The first play of the week was Tesla, which was a red trade, and we're gonna talk about that hand in hand with everything that developed through the market. So the first trade of the week, we saw Tesla being oversold, you know, into this huge void. We've been talking about Tesla for a while now, and you know how it has been very bearish. So after the sell-off and reaching that almost 150 psychological level, we wanted to take a stab at taking a little bit of a bullish setup. After all, the market had been kind of weak, you know, in that setup. So we wanted to play a bounce after witnessing some kind of structural sideways movement, and then take some upside after a breakout. Now this trade didn't turn out to be exactly what it was. There was signs of you know, a possibility for Tesla to rally here, and we took a stab at entering position right off the bat when we got the breakout, and then added to it more a little bit on the pullback, hoping for Tesla to go up and retest the 158 level and eventually 160. We saw some unusual options activity that was kind of pointing towards this, but eventually what happened was the market wasn't cooperating with us. So this was a Monday trade, and if you see what exactly happened on that day, we got a very deep sell-off in the SPX as well as the NASDAQ for that entire session, and so it didn't really give us much to play with. In fact, the momentum that we were looking for was pretty much shut down by NASDAQ. And a lot of the tech stocks that we wanted to play a rebound on didn't really give us the follow through that we wanted. So a quick cut there, manage your losses. I took a 28% loss here for about $2,500. Sometimes the breakouts are not going to go your way, and that's just the way that you have to you know, go about it. As long as you're managing your risk, you have the setup right. You know, this was a breakout setup. As you can see, I've you know, made some changes to the journal as well now. If it doesn't go your way, you just simply cut it, right? There's nothing else about that. Second trade of the week was Apple. So now comes in after the sell-off almost. Since the Tesla trade didn't go my way, I decided to take a break. I've told you guys about this before. The moment that something doesn't usually go my way, I will take some time out to just take a break, walk away, don't, you know, trade much again for that day. And I took a break, came back, and the market was still selling off, and we saw a potential opportunity here on Apple and SPX. So these were all Monday trades, so including Apple, SPX, and Nvidia, Tesla. These were all on Monday. I've now noted them exactly where we took them and all of that, so that, you know, this videos are more clearer. So with Apple, simple. We had the big steep sell-off on SPX, and this was pretty much somewhere near where we entered. So you could see we had seen a little bit of a bounce on Apple, and we were hoping for that trade to structure in. But what I was aware about this trade was there is a possibility that we go down to sweep up some stop losses and create more liquidity. So I ended up swinging this trade into the next day. I believe, yeah, this is a swing trade. Yes, it is a swing trade. The Tesla trade was a scalp, and the rest of these for Monday were all swung into the next day, and we eventually closed them out on Wednesday. So we saw the sweep here, and we decided to hold the contracts the next day. We had that sideways movement after quite a deep sell-off. We were expecting for a gap up play and then a continuation to the upside. And you can see entered this trade pretty much somewhere here around the pullback here, and then held it for a day or two, and it paid out pretty nicely. This Apple trade paid out almost close to $4,300. With SPX, it was a similar setup, and we held it through 1 to 2 days. You can see we entered right when we were touching demand zone, and then we got another deeper sell-off, but this deeper sell-off obviously swept up some of these lows over here, and then we got that big reversal into Wednesday, which is where we exited some of these contracts. So you can see with SPX, we had this was more of like pretty much a swing trade, right? So you're hitting into a demand zone, you know that demand is there. What you want to do is you want to hold into the extended period of time so that you can have a chance for your trade to improve. The expiries, we bought enough time on it as well so that we have time for the position to improve, not weekly expiries. And yeah, so that was what the structure of the trade was. The relative strength of the market was also there. And so on this little push up here and the breakout, this is where I exited the first half of the position and then the second half of the position on SPX here. So you probably see two exits here. Yep, exactly that. One of them for 78%, the other at 28%. No matter what happens at 20%, I will always take some of the profits off the table. And because I had the 38.75 strike, this was a trade that I was sure that we would grab closer to the money. So as we got into the money, then obviously the gamma accelerates on these contracts, and that's when the sweet returns start to stack up. With NVIDIA, this was unfortunate. It had potential, but unfortunately didn't really go through the way that I wanted it to. So with NVIDIA, it was a pretty simple setup. We were looking for entry on the pullback here, and so we saw relative strength on NVIDIA in the early early trading day, and we were hoping for a breakout. So I entered right when we were starting to break out of this range here for a pullback. And as I said, once again, sometimes you're gonna get it, sometimes you're not. And what I did was I held it through the pain here because I knew that eventually it would pull back. And so when you're swinging trades, you have to be a bit patient. So we exited the trade after it got rejected by the 165 key level here. And I saw it got rejected here, and that's when I exited the position. It had a lot more potential, but unfortunately, I had to cut the position. Even though it was a next week expiry, I had to cut the position short because the premiums were deproving. So I made a very small loss on this one, $200. But you know what? It ended up being a decent trade, but just didn't have the follow through on it. Next up was Boeing and IWM. These were now Wednesday, same day trades. They were a day trade. Boeing was a simple one where it broke out of its, it's a very important dual zone. We've been talking about, Boeing's dual zone here for a while. I even mentioned it in a live stream. So it broke out of its 192, 193 level, and I decided to take a stab at taking a day trade all the way up here into the 197 level. So we took some $200 calls that saw a nice 20% return on the day. This was a very simple setup for a day trade. Honestly, it was more like a scalp, but it took a little longer than expected, so I consider it a day trade still. So this, we took on the breakout. You can see here, right when it broke out. And once again, it's not about just capturing the whole move. It's about capturing some piece of the move and making sure that you can consistently hit these. There was momentum, there was volume, there was some unusual options flow that came in as well. Sweepers were picking up contracts, so I decided to take a stab at it, and it paid out. And that's just a simple setup there. You had the volume, you had the breakout, you had a good amount of follow through on the price action, and we took profits right when we started to get up into this range, because we know that Boeing has a very notorious history of rallying and then selling off aggressively. And so with Boeing, it's all about knowing the stock intimately. This is another thing that I always tell you guys: pick a few stocks and know them intimately. That's more important than anything when you're trading. Once you know their price action and how it moves, you will do much better in the way that you look at the individual stocks that you trade, because you know how they behave. For example, I know Tesla will always sweep lows before it rallies, or Boeing is going to rally and then sell off. So I took profits early here and cut that trade. IWM was also another case where we were hitting a very key level. You'll see we hit the demand zone, and then we had a gap up play right into the open of the day. I took a long trade here, exited right at the top here when we saw the momentum start to fall. And this was a simple case of just play the day trade here. Remember that when you see long candlesticks, that's when your momentum and price action starting to expand. And then when things start to slow down, you see the candlesticks start to get shorter like this. That's when you want to start grabbing exits, and you shouldn't need to be greedy about it. Yes, it can keep running, it can keep going higher, but remember, at the end of the day, your job as a day trader is not to keep pressing the greed and more people are going to FOMO into this. Nothing is guaranteed. I've already posted a video about that last week, so make sure you go check that out. Nothing is ever guaranteed. You take profits off the table and you move on to the next trade. Simple as that. Next up was Apple. Again, pretty much, I believe, this was just runners from the previous day. So I left some runners, and they paid decently back 48% as Apple ran higher on Wednesday as well. So pretty much closed out these in 3 tranches. You can see one tranche here, second tranche here, and third tranche here on Apple. So the first tranche 19%, 39%, and then 48%. But you can see that these are only 5 contracts, and therefore, even though they're a higher percentage, they much smaller position. Then we have a Wednesday trade that we opened up on SPX. This was now a bearish position because we were starting to see rejections. And this was pretty much after looking at the price action of SPX here for the week, we decided to enter some SPX puts. This is where the entry was made once we started to hit that 3880, 3900, which I was telling you guys about. I've outlined it in the newsletter, and I'll be outlining our direction for this week as well in this week's newsletter. So we saw that movement. We took a short position here, expecting for us to clear out some topside liquidity here before reversing, and that's exactly what we got. So perfect little entry here on the SPX puts. We took some 3,700 puts for pretty much, I believe, January 20th, and we played those down. My first exit of the contracts were here. Second exit was here, so you can see exactly where the exits, entries and exits were. Yeah, and you will realize it's not about me holding these contracts all the way till, I should have held them all the way through here, but I didn't do that, right? Why? Because the moment I see, okay, we're hitting some key levels, and I know that I can take some profits off the table. This is my first sweep out, right? Get out on when, as I mentioned in last week, when the candles are red, when momentum is in my favor. People are willing to pay higher prices for the contracts. I swept out some of the contracts here, and then more out at the 3806, which was a very key level. Now, midweek, we also received Intel, and I mentioned this earlier, with JP Morgan and a bunch of other market makers having pretty much a massive put spread collar that was about $15 billion, and they were all around the 38-35 strike. And then we further got confirmation in another article by Nomura Securities, which, the article is written by Charlie McElligott. I love reading the articles. They're obviously, they give us very specific insight on market granular activity, which is just studying, the market dealer stuff. And you can see, obviously, we go through a lot of nitty gritty on the Discord trading floor here. But yes, that report that they put out was really on the money, because it showed us that, with confirmation that there were people defending those strikes. And then later on, I saw another report as well, this one that confirmed, by Bloomberg, also that GS Future Strat model dealers were long $2.2 billion gamma, and with the gamma concentrated around the 38-35 strike. And there was about 45,000 contracts in open interest on the 38-35 strike for 30th December, which means this week expiry coming, right? Across both puts and calls, acting like a magnetic force. So we knew that SPX would definitely center around the 38-35, and so this became a magnet point for price action for us to whipsaw between. And so right around that 38-35, when we started to get below it, is the reason why I exited the SPX puts. Yes, I could have exited down here, but you know what? It didn't make much of a difference to me because I already bagged majority of the move, right? Remember, if you're eating the fish, don't try to eat the head or the tail, or don't try to eat from the head to the tail. Remember, just grab the most juiciest part, which is the body, and then throw away the bones. Let the vultures pick at the bones. Pass the bag of shit to somebody else to hold, because you don't want to be caught in a crossfire between market dealers. Okay. So I exited those two positions, I believe, in 3 tranches here. This was, let me see, actually no, two tranches. So the first one was here for 30%, and the second one was 58%. So you can see this is the first, this is the second exit. Simple. And then on Thursday to Friday, we took pretty much SPX calls to play the bounce, because we knew that the dealer level would be pretty much defended, right? So this one was a pretty great entry. I mean, I managed to catch pretty much very close to the bottom here. Right after I closed out the puts, I saw selling was getting a bit crazy. I decided to take a swing position for some SPX calls. Played those to the upside, 3,800 calls, and I exited this in 2 tranches, I believe. One with which got stopped out later on. I'll show you exactly where. Majority of position I managed to close out the next day. Pretty much over here. So got out of majority of the contracts at the open, and then the other one got stopped out as we came down here for 20%. So I got stopped on that trade, and then I didn't take any more trades. This was on Friday already, right? Netflix was another one that we were trading for calls, but then didn't quite go our way. So Netflix, this is the setup. We did now. The reason for the Netflix trade was an interesting one. So this is another thing that you guys should learn, or it's a learning point here. It's Netflix had very good relative strength compared to the rest of the market throughout the entire week. If you consider exactly how much each stock sold off throughout the entire week, with comparison to Netflix, like obviously Tesla was absolutely demolished this week, right? You would see that Netflix didn't really move much to the downside at all. In fact, it just kept ranging sideways, and this is great because this shows us that the stock has relative strength with respect to the index. And so I decided to take a bullish position when it didn't sell off as hard. It tried to go back up to retest, but then it failed. And the moment that it failed here, I decided to exit the position at a loss, because I could always enter in the future, and I don't want to hold the position into the next week. And so even though I had 30th December expiries, I decided to cut the position temporarily at a very small loss of 14%. Rather than hold it into the next week and hope that the position is going to improve, I can always reset when I see the next breakout and take that there, right? And then I also entered some positions for a swing over the weekend and into the future. So I have some this week expiry Tesla 130s, which are calls because it's been oversold for a very long period of time. And I've strategically entered it after some consolidation. Obviously, this is just a stab, a very, very small position here. We're looking at not, a very high, a high conviction trade. So very small position, taking that one as a starter. I also took some Tesla shares. I posted the reasoning on the newsletter, and that you will get this morning on Monday. I think it's the day after Christmas for you guys. So I'm sending a newsletter out in just about after we're done with this YouTube video, and then you'll see the reason why I decided to take a nibble position in Tesla shares, and I just bought about 500, which is not a lot. And then lastly was XOP. We covered this on the pre-market live stream. Energy has been one of those that have retraced back down pretty hard, and we were looking for that bullish bounce on energy, and so you can see XOP bounce pretty nicely from this long-term trend line here. We were looking for an entry on it. This has been a very, very interesting level of bounce level for it. Obviously not saying that it can't go bad or anything like that, but I like the risk to reward ratio to the upside here. And the setup looks nice. Not only that, we have a macro situation improving for oil in winter with some EIA reports that I've been reading sounding off with some bullish possibility for crude and gas. So we're looking at a bullish swing on energy for that reason. I took XOP and XOM both. XOM, a little less of a better setup, but then still nonetheless a pretty good setup. Bounced pretty nicely and has been looking kind of bullish, so this is the reason for that setup, and we're looking to play this into the upside here. Took some 110 XOM calls and 140 XOP calls, so we're just playing to the top of the ranges. We're not looking for huge breakouts, but if those come, then we will benefit from those as well, because the gamma on those contracts will start to accelerate. So that's all I have for this week's trades, and I will be putting out another video next Sunday. I hope that you guys enjoy watching these, and yeah, I'll see you guys back on next Sunday again. I'll be doing the pre-market live streams on Wednesday and Friday this week, since Monday is a holiday. I hope that you guys have a great time with your family and friends. Remember to take a break, remember to disconnect, and we will be sending out the newsletter, so watch out for that, and we'll see you on the next one. Take care and peace.